Well, hello, Maverick traders. It is nice to see you here. This is Rob, and we are, let's call it 12 minutes away from the China GDP report. Wow, I've got April 16th, 2016. Wow, this is really, really far in the past. Sorry, that's going to bother me. I know it doesn't matter, but it's just going to bother me. Wow, and then I also just changed it, almost to change it to 2018. All right, welcome, Maverick traders. It is China GDP, April 16, 2019. The report is due out here in about 12 minutes. So we're not only getting the China GDP, we're also getting a few other numbers. We're also getting industrial production, and we're also going to be getting retail sales. So obviously the GDP number, that's the big number. The second biggest number is probably the industrial production number. And the third most important number is going to be the China or the retail sales. Okay, so let's jump in and let's see where we are in the markets here. I'm just going to go to, let's first of all check the Shanghai Composite. Right, so the Shanghai Composite is basically flat for today. It is, we had a big up day yesterday, up 2.5%. The PBOC injected some liquidity into the economy. So the China market had a nice move yesterday. And you can see the China market is basically flat here. It's basically down 0.06%. So that is going sideways. Let's take a look at the Nikkei. That's the Japanese market. All right, so the Nikkei is up 0.2%. Okay, so we had a slight up day in the U.S. markets today. Nothing all that big. We have a slight gain in the Japanese market, and we have basically a flat Shanghai Composite. So it's not like we've got this big rally going on right now. Everything's really flat. We did get some earnings after the bell. We got Netflix. And the initial report was bad, and then they basically came back, and Netflix is trading basically where it went out, where it closed today. So we really don't have any follow-through whatsoever right now as far as momentum, energy, direction. I think we're still at this, slightly bullish period. So not a whole lot of excitement. Let's catch up on what has happened since the U.S. closed today. Is we did get CPI out of New Zealand, and it was terrible. It was terrible. It was supposed to come in at 0.3. It came in at 0.1. Remember, the RBNZ, they came out recently and said they're looking to possibly make 2 rate cuts. And numbers like this, just a 0.1 CPI, boy, that really kind of makes that more of a clear thing. So you'll see, we'll take a look at the chart here. The Kiwi's already been hit hard. It's down almost 1% against the yen. So we're already down 0.8, 0.9% across the board on the Kiwi. So the Kiwi is by far the weakest. It's definitely out of favor right now. So just numbers, we're looking for 6.3 on GDP, and we're looking for 5.6% on industrial production. Okay, so we have about 8 minutes before the reports come out. Let's go ahead and jump into the market. Let's look at some charts, and let's see if we can find a trade setup. Right now, the first thing I want to do, I want to look at what has happened to all the currencies as of the close of 5 p.m. And you can see that we're looking at the euro as the strongest currency right now. The euro is the strongest. The second strongest is the Swiss franc. Next strongest is the dollar. The dollar and yen are basically unchanged. The pound is down a little bit. But take a look at the growth currencies here and take a look specifically at the Kiwi. The Kiwi's down 0.9%. So the Kiwi's just already been taken out and shot. So let's take a look at just a chart of, just Kiwi yen. And you can see the move we got off of that lower than expected CPI. So going into this meeting, or going into this report, we know that the Kiwi is weak and is not likely to strengthen. So if we were looking to be long if we are looking to say, hey, we think the China GDP numbers are going to be positive for the markets and they're going to spark a rally, well, traditionally the Aussie and the Kiwi are the most correlated to Chinese data. Right now, I think if you're looking to be long, you've got to look at the Aussie and not the Kiwi. Now, if you're looking to be short, meaning you think that's going to be bad news in the China numbers, I think you can take a look at both Aussie and Kiwi on the short side. Now, of course, sometimes when I trade going into a news announcement, I have a premise, meaning I think X is going to happen. And I'm going to build all my trades off of that premise, and I'm going to set them all on triggers. And if what I thought doesn't happen, if what I thought was going to happen doesn't happen, none of my orders get triggered, and we basically walk away and saying, okay, it looks like there was a no trade. However, if what I'm looking at does get triggered, then the trade is on, and then we will manage the trade from that point on. So when I have a premise, I build out my trade. Now, sometimes I don't have a premise, and I say I'm going to wait until the report comes out, and then I'm going to look at the price action and make a trade. I'm not doing it on this one. I'm going to have a premise on this one, and my premise is that the China GDP numbers are going to be bullish. I think that's where the market is right now, and I think that if the numbers come out negative, remember, China numbers didn't look all that great January, February, March. So I actually think there is a possibility this number comes in a little disappointing, but I think if it does come in disappointing, I think it's going to be ignored because the numbers we've had over the last 3 weeks have actually been really good out of China. They've been much better. So I think a bad number doesn't really hurt. I think a surprise, I think it really helps. So right off the bat, I want to be risk on. The big question is, what currencies? What currencies will that be best? Now, right now, the euro is the strongest. And I actually had the euro as strong on my currency board on Sunday. So I do like euro. But the big question is, what do we pair it up against? Now, euro-yen would be the most risk-on pair that we could take a look at. Because, again, if this is bullish, we would expect the yen to drop in value. That being said, these really aren't all that correlated to the China GDP numbers. And we're trying to find a trade that's really correlated to China GDP. So we would really want to be looking at something like Aussie yen, which would be more correlated. The problem is the Aussie just doesn't look all that good right now. And so coming into this report, I thought, you know what, I wish Aussie yen looked better because that would be the clear one. But we're going to probably go with euro yen first because I think it's a better trade overall. I wish it was more correlated to the report that we were actually trading here. Again, Australia is going to be more sensitive to what happens to China, but I think the euro yen looks like it's going to be stronger. That being said, we're technical traders. Let's take a look at these charts. Let's take a look at Aussie yen first. All right, so here we have Aussie yen. You can see that there's not a whole lot going on as far as strength goes in Aussie yen. So if you did want to take Aussie yen, and this was the one you're looking, I think that you would have to be patient until basically 80.38 was pierced. As I said, I'm a little bit more interested in euro yen. And let's see if we can find a better chart pattern on this one. Again, the chart pattern on this one doesn't look all that impressive either. We've got this little downtrend over the last day. So like I'm not too impressed with either one of these, to be honest with you. That being said, I'm going to pick to go with the euro yen, and basically I'm going to set this as my trigger. The last swing high, which was basically 126.53, that's going to be my entry. And then I want to have stop down here basically below this low of 126.20, let's call it 28. 126.28. Right, so I'm going to go ahead and build that order. So I'm going to build the order here. I'm going to put in a buy at 126.53, and that's going to be a stop. So again, my stop, it says get me in if it gets to this point. Now I'm going to go ahead and use a stop limit here. Remember, the stop limit, the limit says, but don't pay more than this. So if I'm at 126.53, I'm going to do 126.63, and that basically will set a limit of 63 cents. So that's basically a 10 cent, or sorry, not 10 cent, but 10 pip window. Let me go ahead and attach my stop to this. I'm going to go ahead and attach my stop, and I'm going to put it, as I said, at 126.28. All right, so this is the order. I'm going to go ahead and just transmit this. All right, so that's the order. The order is to buy euro yen if it breaks out above 126.53. That will be a little bit of reversal pattern. We'll be breaking out of that trend line. And look at that. We're already getting a move up. I really don't like to be filled ahead of the announcement. That's one of my least favorite things. So we are still a couple minutes away from getting the China numbers. And we already have a pop in the euro yen that triggered us. Again, I don't like that because we have not received the news yet. But look, you set your trade, and in trading, sometimes some unexpected things happen. The worst thing to do is try to freak out and figure it out and do something different. Look, the trade was set. The trade was already set. I'm going to stick with the trade, and whatever happens, happens. All right, so the news is out, and we can see the initial reaction to the news. It is looks like a risk-on move. Now, I'm guessing that if we were to go back to the Aussie yen, it's probably having a little bit bigger move. Yeah, and you can see Aussie yen is having a nicer move because, again, it's more correlated to the news. But the fact is, I really like Japanese yen short this week. That was my big premise this week, was that I wanted to be short yen. Because I did think that the market was going to have a nice up move, and that should hurt the yen. Okay, so the trade is in. The trade is at least working our way right now. So let's talk about management on this trade. All right, so again, we've taken a 1x position. I'm not going to be taking a 2x position on this. Again, this is our legging in strategy. It's where when a trade goes your way, you build another position and another position and another position. That works fantastically in a market that is trending and going somewhere. But I want to take you back to the daily charts on pretty much everything lately. And daily charts and everything, we're in a range. We're not going anywhere. As you can see here, this is the daily chart for the last 3 months. And you can see there hasn't really been any trend at all. So you really can't expect there to be a major trend that is going to propel this thing to where you can take a second and third position, because you need these 2 to 3 day moves to really get that expansion. So again, I am not looking to make another entry in this. I'm just going to stick with the 1x position, and I'm going to manage it from here. So our original entry was 126.53. I've got to stop in at 126.28. That is a 25 pip stop. So my initial trade was risking 25 pips. So my rule is I don't do anything until I have 25 pips in profit. So once I have 25 pips in profit, which is going to be 126.78, which is really going to be basically up here where we're breaking out of this last support here. At that point, I'm going to be moving my stop up to break even. At that point, I'll have at least a 0, or I'll have a profit. And then I'll go ahead and choose an indicator to follow for my trailing stop. So again, as you can see, I did not expect there to be big fireworks off of this number. Just for fun, let's go ahead and check and see what the number was. A lot of times I don't even check the number, to be honest with you. And the reason that is that I don't want to be influenced by what I think the number means. Hopefully that makes sense. If you look at the number, you see it, and then you say, "Oh, I think it means this." A lot of times you're going to ignore the price action of the market. The price action of this move was up from the get-go. It was bullish from the get-go. The big question is, does it have any follow-through? So we did get a better print on GDP. We got a 6.4 print, but even better to me, this industrial production number really is a good number. These are the kind of numbers that China was putting up 2 or 3 years ago when it was really cranking in their economy. So these are good numbers. These are really good numbers in China. So I would expect this to help all of the markets. If we go back to the Shanghai Composite, the Shanghai Composite is it's not up all that much today, but it's up a little bit. The Nikkei has strengthened a little bit more. It was up 0.2%. Now it's up 0.4%. So we're getting a risk-on move. So we are in the right place. We're in the right trade. We are having a risk-on move. The only question now is the trade going to move? Now you can see, as I said earlier, the Aussie is working better than the Euro. And I expected that because, again, the Aussie is going to be more sensitive to these moves. But in the end, what I'm really counting on is I'm counting on there being a weak yen. And I think that's going to be the real main component of this trade, is a weak yen. All right. If you guys have any other charts you want to take me a look at, I have someone that says, Aussie CAD. Aussie CAD could be a good trade. You can see Aussie CAD is having a nice move. So great call on this one. Again, Aussie's clearly going to be the best trade. If you are looking to get into a trade off of this news, Aussie definitely is the currency to grab. All right, got another trader says he got long Aussie dollar at 71.82. And again, that's great. That's a break right above this resistance. That's just a great trade. All right, so perfect. So sounds like we've got some traders in Aussie. That's great. And like I said, I'm in Euro, and obviously Aussie is going to be a better performer off of this number. But like I said, to me, this is more about short yen, and I think this trade's going to be just fine. It's definitely not going to move as fast as Aussie trades. So those of you in Aussie trades, you're going to have a little bit more fun tonight. But I think for the whole, like I said, the short yen should work out well. And I'm just going to follow this trade until it is over, which means, I'm going to raise my stop. I'm going to use my trailing stop, and when the trade is done, and we take our profit or loss, and we move on to the next one. All right, great job. I'm really happy that a lot of you grabbed some Aussie trades. That's always great to see. So again, just manage your positions correctly. We have no idea if it's going to happen, but everything is looking very, very favorable for a risk-on move overnight. And again, we said that the Aussie is probably going to be the best performer over the next 8 to 12 hours. And probably after that, I'm going to take the CAD is probably going to be the second one behind that. Let's take a look and see how CAD has reacted. Yeah, so CAD's gone positive against the yen as well. Again, Euro is probably going to be the third best. I would avoid the Kiwi. The Kiwi will probably be decent with this news, but remember, it's got that really bad CPI report that's probably going to cause it to underperform. So again, I think that is a one to avoid altogether. All right, have a question on which one am I going to trail. Look, I use three things in my trailing stops. I either use a parabolic SAR when I want to be very tight and very fast on my trailing stops. I use a parabolic SAR. I am going to be using the parabolic SAR on this one because I think the market isn't giving out a lot of pips right now. We're not having big moves. We're not having big trends. We're not having moves that last 2, 3, 4, 5 days. We're getting one day up, one day down, one day up, one day down. So I want to be a little bit tighter on my trailing stop. So I will be using the parabolic SAR on a 15-minute, which are these right now, these lines right here. So as you can see, these lines right here are a mile away. However, once it reaches up to my my point where I'm going to move my stop to break even, these lines should be moving up substantially. And then basically I'm going to just follow those lines at the trailing stop. So once those lines start to, or those dots start to pass my stop that I moved up to break even, I'm just going to be moving that up periodically. And as long as this currency keeps moving and doesn't go fall below the parabolic SAR, I'll stay in the trade. So I'm going to be using the parabolic SAR on a 15-minute chart. If you want, you can be using some moving averages. You can use other methods, but this is the one I'm going to be using, is the parabolic SAR. And again, I'm using it because I don't think the market is giving out large gains. So I want to be pretty tight on my winners. I want to take what they offer me because I don't think they're going to be giving you out 100, 200, 300 pip moves at this point. I just don't think that's where we are in the market. All right. Now again, so happy that everyone was able to grab some positions here. Look, that being said, there's plenty of times where these positions fail and they turn around and they don't go our way and we get out, and that happens. But at this moment, everything is going our way. We've got, again, the Shanghai market has gone up, the Nikkei has gone up, the stock futures here in the U.S. have gone up on this news. The U.S. futures were flat. Now they're up 0.2, 0.3%. Again, everything looks like it's going our way on risk on. This is where, as traders, we don't want to be like amateurs and take our profits too early, because you make a lot of trades where sometimes they just don't work and it goes against you. But the trades you make where all of a sudden everything, all the winds are at your back, this is where you be patient, let it develop. Let it develop, let it develop. Yes, protect your profits, move up your stop, but let these trades develop. This move should last all night and should last into the U.S. session. It really should. So again, I think you're in the right spot. Go ahead and be patient on this. All right. Thanks for joining me, everyone. Everyone take care and happy trading.